how you can trade Euro US dollar and Great British Pound as well as major pairs using AI. So in this video, I'm gonna tell you guys how you can use AI to trade all the major pairs of Forex, including the support and resistance, the important indicators, plus how you can read the signal pages, the confidence score, the sensitivity, each and everything in this singular video. So without wasting any time further, let's move to our video. Make sure to watch the video till the end because you are gonna find so much interesting content related to your trading strategy in this video. So without wasting any time further, let's get started. Alright, so now let me take you guys towards the website and let me show you how you can check all the signals, the confidence score, the sensitivity on this section. So let's go. So here I am currently on bitcoin.net. I'm using this website, so you can find the link in the description. So here, if you scroll down and click on day trading, and if you select the markets here, right here, Forex, and select the signal strength to all signals, the volatility levels to all levels, and here is the search asset bar. So now here, let's drag a little bit more. Here you can see the asset listed all right here. The Euro US dollar, the Great British Pound, and the Japanese yen, the Australian dollar, and so many. Beside it, it's the prediction. So the prediction is pretty simple. It means that there is a percentage written right here in the red or either green bar. So if it's down towards red and the prediction percentage is high, like say if it's more than 50%, 60%, 70%, 80% towards the red side, then it means that price should go downwards. And if it's in the green bar, that easily means that price would go upwards. Now beside it, it's sensitivity. The sensitivity means simply that how much are the chances that this signal or prediction could be played in the near future. Here you can adjust the time frame according to your risk appetite. Beside it, it's direction stability. So if we hover on the icon, it's written how consistently the signal direction up or down stayed unchanged during the last 5 minutes. Higher is more reliable for short expiries. So it simply means if the number is higher than 50%, it means that the signal has unchanged since the last 5 minutes. So if it's like above 50%, 69% right here, it means that there are chances that this signal could be played like much more cleaner than the other ones having lower score than 50%. Beside it, it's the confidence score. So if I hover around it, it's written right here, quality score calculated, live forecast variables, confidence, trend strength, volatility balance, and time frame fit. A score above 50 means trend direction is strong enough for this setup. So if this confidence score is above 50%, it simply means that this trade is very much confidently could be played. Like you just have to wait for this confidence score to reach above the 50%. Now don't take this trade exactly on the 50%. Wait for the price to cross 60% level, 65% level to make sure that this confidence score matches your trade size. Beside it, it's the risk zone, RSI zone. So RSI zone is pretty simple. If the RSI is below 50%, it means it's currently in the oversold region and price could go upwards in the near future. And if the RSI zone is above 50%, like 60, 80, 90, it simply means the price is in the currently overbought region and might come downwards in the near future. So this is the whole section of the day trading that I have explained to you guys. So make sure that always use your own trading strategy with your due diligence. Do not rely 100% on these AI signals. So it's just here to heavy lift your trading style. If you have a trading strategy, make sure to follow it and always use your due diligence. Do not rely on these signals 100%. So now let's move towards the second part. All right, so now let's talk about the most interesting part in a trader's life, which is technical indicators. So now let's move towards my screen. So here you can see currently I have opened bitcoin.net demo trading simulator right here. And let me explain to you guys the first three most important indicators. Number one is RSI, number two is MACD, and number three is Bollinger Bands. Number fourth, fifth, and sixth will be discussed after these three indicators. So now let's first talk about RSI indicator. So what do we mean by RSI? The RSI stands for Relative Strength Index. So it shows whenever the RSI line is below the 30% average, it means that the pair or asset or coin or stock or commodity, whichever are we on, is currently in the oversold region. the traders or the market investors have oversold this pair so much that it's in the region for a buy section. Now, do not solely rely on this indicator only. Let me show you the other two indicators as well. But first, let's talk about RSI in a deep. Okay, so here you can see, let me adjust it a little bit. So whenever the RSI is currently below the 30% average, it simply means that the price is currently in the oversold region, the buying area. And whenever the RSI is currently above the 70% region, like right here where my mouse is right now, it means that the price is currently on a supply region, or the pair or coin or whatever market you're using is currently in the overbought zone, which means that the pair is so much heavily bought. Now you should expect a correction after this much long momentum period. So here you can see that RSI was on 70% level right here, and the price starts coming downwards along with the RSI. Now the third scenario is whenever the price would be in the sideways zone or the consolidation phase, the RSI would be somewhere between 40% to 50 to 30% level, like hovering around in the middle, which means that you either not going to buy or either not going to sell because price is in the indecisive moment right now. So now let's talk about the MACD indicator. So MACD stands for moving average crossover divergence. So it simply means whenever you can see here, the blue line is the moving average and the red line is the divergence line. So whenever the blue line will cross over from above towards the red line, and you can see this green volume right here, it means that you should expect a upwards momentum in the price or chart you are looking to. Similarly, whenever you see a red crossover from above the blue downwards and the red upwards towards the downside, and you see this red volume appearing, it means that you should now expect a momentum correction in the pair. It similarly works like RSI, but not exactly like the RSI. You can use this MACD indicator to judge the momentum of the price. Now the third one is Bollinger Bands. Now what does the Bollinger Bands do? Bollinger Bands have three lines. Number one is the lower band, the center one is the middle band, and the top one is the upper band. So whenever the price head towards the upper band right here, we combine with these two indicators, the RSI and the MACD, and see either the price have a previous supply zone. Whenever the price would be on the upper band, we will check if the price have the upper region of supply zone on this current level or not. And if yes, we will expect a downward correction, like right here you can see the price fall towards the downwards band. Similarly, when the price would be on the lower band right here, we will see the other two indicators combined with that, plus you use your own trading strategy, and we will see if there is a support lying around at this area. And if yes, we will expect a upside move from the lower band. Now similarly, like the previous two indicators, whenever the price would hover around the middle band like this, you will not gonna touch the price because it's like a undecisive periods. The market either deciding if the price would go upwards or the price would go downwards. So I hope I would be able to and make you guys understand what are the roles of these three indicators. So now let's move towards other three indicators. All right, so now let's talk about the other three indicators, which are simple moving average, exponential moving average, and stochastic oscillator. So now let's apply it again. So here you can see the simple moving average is the orange one, and the exponential moving average is the blue one, and the stochastic oscillator is right here. So now let me explain you one by one what are the working of these three indicators. So if we look towards the blue one, which is the exponential moving average, and the yellow one, which is a simple moving average. So the difference between these two moving averages is the simple moving average gives values to all the price movements in the past, and the exponential moving average give value to the recent moving price average, like the recent ones. Let's assume if you were a swing trader, then the traders encourage that you should use the simple moving average because it respects all the price action in the past. And if you are a short-term trader or short expiry trader, then traders do encourage that you use exponential moving average because it like gives importance to the most recent price action. The simple moving average moves like slowly, and the exponential moving average moves fast. So this is the very like basic comparison between these two moving averages, and the use case is pretty simple. If you are a swing trader, like you hold positions for a week or a day or like monthly basis, you have been encouraged to use simple moving average. But if you are a short-term expiry trader, then it is encouraged that you should use exponential moving average because it gives more respect to the recent price changes. Now let's talk about the stochastic oscillator. The stochastic oscillator is pretty much simple. There are just two levels in stochastic oscillator. Number one is like the 20% level, and the number two is 80% level. Let's assume there is a ball in a room, the ceiling and a ground floor. So if the ball is bouncing on the lower ground level, the stochastic oscillator will show you the level of 20%. Here is the line where I'm hovering my mouse right now. And if the ball is bouncing towards the ceiling, the stochastic oscillator will show you the 80% level. It does not show you the height of the ceiling or the lowness of the ground, but it does show you that exactly where the price is right now. As you can see it right here, the price was on the top, the stochastic oscillator shows in crossover, and price moved towards downside. Similarly, the price was in the lower region right here. The stochastic oscillator shows a crossover towards the 20% level, and the price moved towards upside. So this is the use case of these three other indicators. I hope I'm able to make you guys understand the use case of these three indicators. So now let's move towards the third part, which is analyzing the support and resistance level using the AI versus manual. So now let's talk about the correlation between the three major pairs and analyzing the support and resistance levels using the AI and the manual settings. So let's first talk about the correlation between the three major pairs. Number one is Euro US dollar. Number two is Great British Pound, as known as GBP to US dollar. And number three is USD to CHF, which is Swiss franc. So now let's assume that the Euro US dollar and the Great British Pound is in one basket, and the US dollar against the Swiss franc CHF is in the another basket. So whenever the US dollar gets stronger, these two currencies, US dollar against the Euro US dollar and the Great British Pound against US dollar, these two will go weaker, will go downwards, because as US dollar grows stronger, it will go up, the Euro and GBP will go down. And oppositely, whenever the US dollar will go downwards, the Euro and the GBP will go upwards. But the another basket, which is Swiss franc against the US dollar, which has another scenario. Why? Because US dollar is the first currency and the Swiss franc is the second currency, whereas in the scenario number one, the Euro US dollar has the first currency and the US dollar is the second currency. The Great British Pound is the first currency and the US dollar is the second currency. So whenever the US dollar grows stronger, then the Swiss franc will go downwards. And whenever the US dollar go downwards, the Swiss franc will go upwards. These two and this one pair has opposite proportionate reaction to each other. Whenever they go upside, this will go downside, and whenever this go upside, and they will go downside. So this is the most basic correlation between these three pairs. So now let's talk about how we can analyze the support and resistance levels using the AI and the manual. So if you come on the front page of Bitcoin.net, click on the day trading right here, select the market Forex from here. Now, let's suppose I am searching for the Euro US dollar SR levels. So now if I click on it right here and scroll down a little bit, here you can find the technical analysis zone. And if you don't want to analyze by yourself, you can just, here's a key tip basically, you can use the key indicator section and the technical analysis section right here, which like listed RSI, MACD, SMA, SMA 200, and EMA. Here is the signal and here are all the values. You can use it in your trading strategy. If you want to see the technical analysis, here it is. It's 4-star for bearish, which means that the price could go downwards in the intraday. You can either select 7-day, 1 month, and so on. And if you like scroll down a little bit more, here is the most important thing. Let me zoom in a little bit right here. So here the support and resistance levels are listed. So here the current price is 1.1419, and the R1, which is which supposed to belongs to resistance number 1, which is near term resistance, is 1.1599, and the R2, the swing resistance, basically is 1.1733. The major ceiling, which is the high range of the day, is 1.1868. And now similarly, it's listed S1 near-term support, S2 the structural support, and the deep support belongs to S3. So the S1 is 1.1239, the S2 is 1.1105, and S3 is 1.0970. So here you can use this section if you are not able, or if you are not enjoying the process of marking the SR levels, or you want it quickly by using just AI. Head over to the section, scroll down a little bit, check the key indicators, the technical analysis, you can say the radar, plus you can check the support and resistance levels. Similarly, you can check for other pairs as well. Let me show you. Here, come on the day trading section. Right here, select Forex, and now you can see the Great British Pound as well. Let me select it. I scroll down a little bit. Here you can see the price is pretty much neutral. So you can also check the key indicators, numbers all listed right here, and scroll down a little bit and you can find the support and resistance levels. Same as the previous one, you can check for all the pairs. Always make sure to combine these all confluences. Basically take this as a confluence. Do not use it directly to trade upside or downside. Always use it for confluence. You can check the support resistance levels, you can check the key indicators and the technical analysis radar. So take all these, make a confluence into your trading strategy, then make your trading decisions. Do not solely rely on these indicators. Always use your due diligence. This is not a financial advice. These are the tools to help you guide in your trading journey. So now let's talk about the time frames for the Forex trading. Now, if you are a intraday trader, the time frame is something different. If you are a swing trader, the time frame is something different. And eventually, if you are a positional trader, the time frame is something else for you. Let me tell you that if you are an intraday trader, between 5 minutes to 15 minutes is the perfect time for your trading strategy. Why? Because you are a kind of trader who wants to open his trade and close it under the same day. So 5 minutes to 15 minutes is perfect time for you. And if you are a, you can say, swing trader who likes to hold for hours, days, or weeks, you can go for somewhere between 1 hour to 4 hours. And if you are a positional trader who likes to hold but trade for over months or weeks, and you can say half year, you can go for above 1 day time frame. Now, if you are a, you can say, intraday trader, most of the strategies works for you in a different way. If you are a swing trader, the most of the strategies would work for you in a different manner. And the third category falls in something very different stage, which is positional trader. They usually do not use any kind of strategies, as positional traders and swing traders and intraday traders both use different kind of strategies, and the positional trader has different kind of trading strategies because they are using daily time frame or weekly time frame. So their positions are very, very large and they have a holding capacity of a gigantic whale. So these time frame suits for these three kind of traders. So now currently I am in the end of my video, so I hope I'm able to make you guys understand all the technical indicators, the time frames, the how you can use AI for support and resistance levels, the correlation between the trading pairs. Plus, I also showed you how you can use AI to mark support and resistance levels, and also explain you all the indicators one by one, step by step. Watch the video completely. It will gonna help you a lot in your whole trading journey. Do not use this everything shown in the video as a financial advice because it's just for confluence. Always use your due diligence. If you want to check out the website bcoin.net, head over to the description, check out the link, and follow right here. I'll see you guys in the next video. Until the next time, happy trading.